Hello, this is Ernest Mast, President and CEO of Doré Copper Mining Corp. I'm here to go over our latest presentation and give an update on the company. I will be making forward-looking statements during this presentation. Our project is strategically situated in the province of Quebec, one of the top mining jurisdictions in the world. Our project is a brownfield copper gold project located close to the town of Chibougamau. The project is in an area where there was past production from the 1950s until 2008. The deposits are characterized by being high grade, whether it's copper or gold, and we have a number of deposits. And so we did a PEA in 2022, and in that we detailed the 10.5-year mine life, producing over 50 million pounds per year of copper equivalent at an all-in sustaining cost of $2.24 a pound US. And we had an initial capital cost of 180 million Canadian dollars, making this project one of the least capital intensive copper projects in the world. Our team is highly experienced. We have insider ownership. The company has a very well experienced board in order to support the project going forward. And a lot of the team members have experience underground copper and gold mining and working in Quebec. Currently, the company's market cap is close to 18 million Canadian dollars. We have two major shareholders who have been very supportive of the company throughout its journey. This is Ocean Partners, who have an offtake agreement, and Equinox Partners, a institution based in the United States. Company has no debt on the balance sheet, and as well has coverage by Paradigm. We also have investors which represent the Quebec government, the Quebec Pension Fund, and some exploration funds as well. In terms of experienced leadership, and Mario Stefano, who's the executive chairman, are founders of the company. The other members of the team, Nick Kwong, our COO, has experience in underground mining and has been a general manager of a large gold mine in Saudi Arabia. Gavin Nelson, our CFO, has experience working with a number of junior mining companies. Lori Gabory, our VP Investor Relations, spent the majority of her career with Detour Gold and went through that experience of taking a small company to building the biggest gold mine in Canada. And Jean Tanguay, our general manager in Chibougamau, has been working with these projects with previous companies and is very familiar with the area. We have a strong group of independent directors, giving us a good balance of technical, financial, and community expertise. We also have an advisory board with people associated and affiliated with the company. Copper is really the right commodity at the right time. It's a key metal in the infrastructure story or the energy transition story, which is currently occurring. And that includes electrification of our transportation with electric vehicles. It includes more renewable energy production via solar and wind production. It also means that in our homes, there's a lot more electricity used. Another item which isn't on the slide is the recent surge in server capacity required for artificial intelligence. And the reason why copper is such an important part of that story is because of its physical characteristics, principally its conductivity and its malleability. So copper wiring is an essential part of the modern world, and we continue to see its application in the energy transition occurring. Furthermore, when we look at supply and demand, we see that there's a very large gap of approximately between 5 and 10 million tons, which is projected to occur by the end of this decade. And it's because the consumption of copper is scheduled to continue to increase by approximately 2 to 3% per year, which has been the trend for copper for the past 30 or 40 years. But what's changing in the industry is the supply portion. Although there is currently quite a bit of recyclability in the copper industry, we just need more primary copper mines to get into production. and that's been extremely challenging for a number of reasons. There's a number of projects which have been stalled for essentially 20 or 30 years, and it doesn't look like they'll be able to get a permit anytime soon. And this is resulting in that very large gap between supply and demand. And that is only going to continue to support prices as we move forward. Currently, copper prices are extremely robust, over $4 a pound. Earlier in May this year, copper hit an all-time record, approaching $5 a pound. And we believe that copper will continue to perform very well in terms of its price. Talking about our projects on this slide in our land position. The land position that we have is located approximately 300 miles or 500 kilometers due north of Montreal. It's an area, an administration area of Quebec called the North of Quebec. Close to the project is the town of Chibougamau with 7,500 people. The largest distance we have between one of our projects and our centralized milling copper rand facility is approximately 60 kilometers. So we completed PEA in May 2022, where we detailed production of 50 million pounds per year of copper equivalent production in a hub and spoke arrangement where we have a number of mines feeding that centralized mill. In the PEA, we had 3 mines over the life of mine. We would start with Corner Bay and Devlin, and then after 4 years, the Devlin deposit would be depleted, and we would move with the Joman deposit. However, we have a number of other mines or other projects in the area, and we have tremendous optionality in terms of getting some of those other projects into the mix. So we've been doing some exploration over the last couple of years. We've identified some prospects that require further drilling, and also we've moved forward with some aspects of the feasibility study. Being in the province of Quebec is a huge advantage because there is Quebec and Canadian support of critical metals, critical metal projects, which we are definitely part of, and we should have some good news on that as we move forward. Our PEA results, as I mentioned before, detail the 10.5-year mine plan with an average feed grade from the mine of nearly 3% copper equivalent, making this one of the highest grade copper projects in North America. Annual production averaged about 53 million pounds per year of copper equivalent, and a $2.24 per pound, $2.24 per pound all-in sustaining cost. And all-in sustaining cost is your operating costs, it's your sustaining capital cost, it's your closure costs, and it's your commercial fees for selling your product. So that shows you at say, for instance, a price of $4.24 per pound copper, we would have a margin of over $2 per pound of copper produced. And with 53 million pounds per year average production, the average over the life of mine would be free cash flow of approximately $100 million US, making this a very robust project, which is shown having an after-tax NPV of 193 million and a rate of return of 22.1%. Now that was done at a copper price of $3.75 and a gold price of 1,820 per ounce. Prices have increased significantly since then. So if we look at the project at $4.20 per pound copper, which is still considerably less than today's price, we see that the project becomes even more robust with a after-tax NPV of over $300 million and an internal rate of return after tax of 29.4%. So this is an extremely robust project, not a large project by copper standards. However, with 50 million pounds per year of copper equivalent production, that's over $200 million per year of revenue. And you can see it's going to have a very nice and tidy cash flow once it's up and running. One of the competitive advantages that we do have is the location or the proximity of the mill and the tailings facility to the town of Chibougamau. It's only a 10-kilometer ride, so therefore our employees can go home every night, and this is going to be a commuter operation. It's exposed to an expensive operation where you have to build a remote camp. The other infrastructure in place of importance is a road network. We even have a bypass road south of the town of Chibougamau so that when ore comes in from Corner Bay and Devlin, it does not have to go through the town. The mill site is connected to Quebec's hydroelectricity grid with a 25 kilowatt connection, and that has a capacity of 25 megawatts. We plan on using the existing tailings management facility to store the tailings, but we will do so in what's called a dry stack configuration, which means we're going to filter the tailings prior to depositing the tailings on the existing tailings beach. The result of that is really minimizing environmental impact from the project. We've also had active engagement with the communities around the project. The town of Chibougamau, as you know, as you can see, is extremely close to the project. The town was built on the back of our mines, and therefore there's kind of a sentimental view on our project with the town of Chibougamau. In addition, there's the First Nations village of Ojibougamau, which is located approximately 60 kilometers from the project site. And we also have a very good relationship with that community. And eventually we'll be doing an impact benefits agreement with that community. In Quebec, there's been a number of mines and projects that have signed impact benefits agreements with the First Nations, and the First Nations do welcome mining projects in which they can participate and train their community members and also create businesses that will eventually work with us. Another interesting thing about Chibougamau is that there's a government-sponsored training center. A number of bigger companies insist that all of their employees, prior to starting work at their sites, spend 6 months at that training center. In our case, we have the training center in the town, which is going to be our nearest neighbor, and therefore we also plan on utilizing that facility as a training facility for our workers. And this will allow us to recruit workers, French-speaking workers, principally from Quebec and all over the world, in order to be trained prior to starting up the mine, and we can do so at a much lower cost than anyone else could do. Part of our infrastructure is processing. We have a processing plant which closed in 2008, and on the right-hand side of this image, you see a photo of the mill building. The mill building has a capacity of approximately 2,700 tons per day, and our life of mine throughput averages 1,350 tons per day. So our processing plant is over-designed for what we need for this project. However, that's done purposefully because we plan on exploring some of our other properties in order to identify new feed, and therefore we have that feed capacity. And that extra feed capacity could result in larger annual production, or it could result in a longer mine life. Getting into the details on that mill building, as I mentioned, it last operated in 2008. We plan on modernizing the mill at the same time we're looking to restart. So we'll be installing a brand new ball mill with a capacity of 1,500 kilowatts, which is not large by industry standards at all. And that will replace 5 small ball mills that previously were in operation. Our goal with the refurbishment of the plant is to have a modern facility running with very low energy consumption and optimizing process control. We've refurbished some of the equipment in the plant, as you can see on the photo on the left-hand side. There we see some cleaner flotation cells, and in the background, a concentrate thickener. And also we've installed LED lighting and done some repairs to the roof. We've also connected the plant to the Hydro-Quebec grid by refurbishing a transformer. So you can see we're on our way to rehabilitating the facility. Another important aspect of our infrastructure is the tailings facility. Here we see an aerial image of the tailings facility, which last operated in 2008. We plan on doing a dry stack facility by filtering the tailings at the mill site and then transporting the tailings and depositing them on levels on the tailings beach. Very low environmental impact that we plan on having. And then the water, any excess water in the area will flow into an existing polishing pond, and then the water will flow into Lac Doré. We currently monitor the water from the tailings facility on a weekly basis, and I'm very happy to say that the water quality is excellent. And this tailings facility is actually currently monitored by Environment Canada, and we haven't had any incidents or any issues with it since the facility closed in 2008. Now I'm going to switch and talk about our mining assets. The main mining asset is the Corner Bay mine. This mine was partially built in 2007 and 8. A decline was put down to 115 meters, and about 36,000 tons of ore development ore were removed and treated in the mill with good metallurgical recoveries and concentrate grade. We plan on mining this deposit with a long hole open stope method called Avoca, and as well as open stoping with pillars. That mine plan was detailed out in our preliminary economic assessment. The host rock of this deposit is extremely competent, and the deposit is near vertical, and that makes for relatively easy mining of this deposit as we go forward. Our plan is to have crushing and ore sorting at the Corner Bay site, and that's going to reduce the amount of material that is going to be transported to the mill. We'll be able to reject, say, 30 to 40% of the material at the mine site. The reason why this is possible with this type of deposit is that it's relatively narrow vein with an average thickness of 3.5 meters, but more importantly, it's a very firm delineation between the semi-massive sulfide and the host rock. So this type of deposit is a perfect deposit for ore sorting. And then we'll be transporting the material 47 kilometers to the mill. On the right-hand side, we see a graph showing the increase in size of the Corner Bay deposit since we got involved in this project in 2017, and we have been incredibly successful. When we started, the deposit had 1.5 million tons, and we've grown that to 8.5 million tons while keeping the grade pretty similar at 3.2% copper. Also, we've done work on the ore sorting tests and have had a lot of success proving that out with a number of tests. In addition, we've done some post-PEA flotation tests where we established a higher concentrate grade than we had in the PEA and confirmed very high recoveries of the ore of the copper from a sorted ore concentrate. We've done some infill drilling on this deposit, and we plan on continuing to do some more in 2024 and obviously leading into 2025, as it's one of the key elements of our feasibility study. But the infill drilling that we did in 2022, we had some wonderful intercepts, which we show here, where we're getting nearly or close to and above 10 meters at around 5% copper, half a gram gold per ton, and high-grade silver, either 30 grams per ton to 15 grams per ton. Silver was not in the PEA study, and we plan on including it in the upcoming feasibility study, and that could result in additional revenue of approximately $45 million for us over the life of the mine. Corner Bay also has an exploration story. We recently acquired a block of land to the north and to the east of Corner Bay, which could host a northern extension of Corner Bay that's never been drilled. In addition, this new land had a number of extremely high-grade intercepts that were relatively thin, but still around over 10% as an intercept. And these are two aspects of Corner Bay that we plan on exploring for. In addition, we have around the margins of Corner Bay also some very exploration potential. Devlin is a secondary asset for the hub and spoke, and we plan on commencing operations at Corner Bay. It's a horizontal deposit about 80 meters deep. There is an existing ramp that accessed the ore in 1982, and we plan on reutilizing that access, probably making it a little bigger, and it becomes a perfect complement to Corner Bay as we would commence operations there. We will be mining nearly a million tons over a 4-year mine life at a grade of close to 2% copper. It also, like Corner Bay, has a semi-massive sulfide consistency, and therefore it will also be amenable to ore sorting. The Joman deposit, located 60 kilometers from Chibougamau. This is a large 6,000 hectare land package that contains the past producing Joman mine. But prior to talking about Joman, we really have a wonderful exploration opportunity here. The land, which we recently acquired earlier this year, is 65% owned by Doré Copper and 35% by the Quebec government. There's been very little exploration on that property. And it's in an area where there's a lot of activity in the gold sector with IM Gold and their Nelligan deposit, or Northern Superior with their Philibert deposit. As a result, we see a lot of exploration potential at Joman, principally at the Norhart showings. Finally, at Joman itself, the past producing gold mine, having produced 1.2 million ounces of gold, the very high grade of 8.26 grams per ton. There's also some copper, which means it can be treated in our process plant. And Joman ore was treated in our process plant prior to the mine closing in 2007. We currently have 133,000 ounces of gold in resources. However, the deposit's open at depth, and it's open between the two lenses in blue that you see on this image. So our strategy with Joman is we would start up with Corner Bay and Devlin, and then we would then do exploration at Joman in order to identify a lot more gold at Joman, and then we'd look to put it into production. Joman could give us a gold byproduct of 30 or 40,000 ounces a year of gold, in addition to the production from Corner Bay. So we're currently in a three-step approach. We currently are working and progressing work on the feasibility study, not as fast as we originally had anticipated to do. However, we are working on some key milestones, such as we did an ore sorting test and a complete metallurgical test on the Corner Bay ore. We've engaged engineering firms for detailed work on water models. On the permitting process, we've submitted the permit application to the Quebec government, and we've received a response, which is called the project directive. And it essentially lays out what needs to be done in order to obtain the permit. And we're currently working on a number of those aspects as well, having completed the majority of our baseline work. And finally, while we're doing this, we're doing some drill testing of exploration targets in the around the mill and close to Corner Bay. Full goes according to plan. We could be in production as early as 2028. Now, in terms of exploration, this image here shows the location of the Copper Rand Mill, but more importantly, it shows what's known as the Lac Doré mining camp, or the Chibougamau mining camp. And the majority of production historically was from this area. The largest mine was the Copper Rand mine, having produced nearly 16 million tons at 1.8% copper and 2.8 grams gold per ton. And around this deposit, there's a number of interesting targets that we have, such as the Jacqueline deposit, the Cedar Bay deposit, Doré Ramp, and Shaft 3. We recently drilled the Cedar Bay Southwest zone earlier this year. We put 2 drill holes into a structure which is approximately 1 kilometer in strike distance. It had never been mined before, while the Cedar Bay mine was a prolific mine in the camp, producing 3.9 million tons, 1.63% copper, and 3.2 grams gold. What we see in the southwest zone is a tendency to have higher copper than gold. And the 2 drill intercepts that we did intersected the structures. We plan on doing downhole geophysics this winter, and with that, generate new targets for additional drilling. Another target we have is Gwillim. This is we own 50% of this deposit with Argonaut Gold, which is now Alamos Gold. It's located 15 kilometers northwest of the Copper Rand Mill. It also was a past producing mine. However, approximately a kilometer away from the past producing mine is the KOD zone. And we have a number of high grade intercepts with over 10 grams per ton gold at Gwillim. And it too on this property, there's other gold showings. And so we're doing compilation work on this area to try and generate new targets, but it represents a very high-grade gold opportunity for us. So in summary, the company has a lot of factors or parameters in its favor. So for instance, we're consolidating, or we have consolidated, a large brownfield land package in the prolific Lac Doré Chibougamau mining camp. We have a positive PEA. We have established mining infrastructure, milling, tailings, roads, electrical connections in place already. And that's the reason why our PEA showed a relatively low capital cost of 180 million Canadian to get 53 million pounds per year of copper equivalent production into play. These are high-grade copper gold assets with a lot of growth potential. With the exploration work we're doing, we're establishing a project pipeline to feed the mill. The PEA were 3 deposits, but in reality, we expect we could have as many as 6 or 7 mines finally feeding into that mill. So we're currently looking to finish off our feasibility study so we can redevelop the project at a low capital cost. And we have very strong financial partners. Our 2 major shareholders have proven to be with us through this journey of getting this mine back into operation. And we expect the Quebec government to be very interested, as it represents a very near-term opportunity for critical metals production in the province. Thank you for your time. And if you have any questions, feel free to contact the company.